All right. Good morning, everyone. Happy Friday. I hope you had a good week. And let's finish off strong here. Let me crack open this energy drink real quick. Where the hell did I put it? There we go. All right. All right, let's get diving in here, though. Good to see everybody. Get the chat up. All right, we are ready to rock. So let's take a look at some futures here. And let's get a daily chart going. So the daily squeeze for the S&P 500, it's kind of unfolding how you would imagine. Such a good uptrend, such a bullish market, and just such a solid structure to that squeeze. Just building up energy here. Histogram is positive. And then remember the 4-hour squeeze that we were talking about, I think, on Wednesday together. That fires long, so there's that nice push in the market. In terms of how far this can go, I think you look at it like any other squeeze. Squeeze fires long, you got a pretty good shot to move into at least 2+ ATR. So I think the S&P 500 does look good, and even if we pulled back all the way to the 21, I'm still looking to buy that dip. So SPY looks good. And for the Qs here, a great looking daily squeeze. So you held that 21 on a couple of tests here. So structure holds up. And the 4-hour chart isn't the cleanest. Let's see if we can find a pretty squeeze here. The 2-hour, not so much. All right, so you got an hourly squeeze coming into play here. Do we have a 30-minute? So the lower time frames are a little bit sloppy, but I think you got a great looking daily chart here. So just like we just saw the S&P 500 do, you build up energy at the 21. You got a good shot at starting to push towards +2 ATR. So looking within tech here, if the Qs make that move, I think you're going to see this daily squeeze in Microsoft do very much the same thing. Make a nice little pop here into 2 or so ATR. And then Apple, which I think has been one of the better looking setups in the market. Perfect daily squeeze. You got all your bullish momentum. I think Apple's got a great shot here in a move into 150 and change, so long as the Qs obviously make the same move. So that daily squeeze for the Qs fires long. It's a good looking Apple chart, though I think you might want to buy it on a dip instead of up here at +1 ATR. But you got great looking structure with a handful of these really important tech stocks. Apple's probably the best looking daily squeeze in the market. That's a matter of opinion, obviously. But Microsoft looks really good. Again, I wouldn't buy it here. I like my entries at the 21, but you have bullish momentum and you got bullish structure. So Apple, Microsoft, even Facebook is setting up here. So if the Qs make a nice leg higher, I think Facebook's poised for a move into 370, 380. And then Google, who's just been, what a rock solid trend. Super strong stuff. And then here is your daily chart. And while we don't have a daily squeeze, there's your stacked EMAs. You got green 10x bars. Just chopping at the 8, chopping at the 8. So if we just take a peek, that's a super bullish 4-hour squeeze. Positive histogram, the green 10x bars. So you got the 4-hour here. You've got a great looking 2-hour squeeze. You got a great looking 1-hour squeeze. And you probably got a 30. And you got a 30. So, whether you're a short-term swing trader, whether you're a day trader, Microsoft, Google, Apple, those are things to focus on right now. Not just because they have good structure and good trend all on their own, but really the reason being, at least to me here, is you have the potential of a nice move higher in the whole group. Those are my favorite trades. So, like Goldman Sachs, right? Pretty straightforward. Really good looking daily squeeze, a really good looking 3-day, a great looking weekly. But the real kicker here, as far as the strength of this move, was that the whole group, the financials themselves, were setting up in a daily, a 3-day, a weekly squeeze. Those are some of my favorite trades. And you're going to find something like an Apple, great looking daily squeeze. At the same time, the basket it belongs to is potentially gearing up for the same move. So I do like Apple, Microsoft, Google here. And then I think you got to keep an eye on Tesla here. So you could look at this at a couple different ways. Let's start with the daily chart, I suppose. So with the daily chart, you got your stacked EMAs here. So that all checks out. You had a nice daily squeeze. Daily squeeze fires to the upside. And we're just kind of building up momentum here, or building up energy rather, in this big consolidation on top of the 8 EMA. So as that daily squeeze is firing, and then as you got a 3-day squeeze trying to fire here, and then from the weekly perspective, you got a weekly squeeze getting ready to go. You could very well see that next push here take place off the 8 EMA. And if we consider the quality, so to say, of the lower time frame squeezes on top of the 8 EMA, again, that 8 EMA is like a launching pad. Like, you look at it this way. If this stock is really strong, NVIDIA might be a good visual example of this, actually. And this was like a very similar domino effect. Daily squeeze, gets going here. But the real kicker here for NVIDIA was that weekly. So just for conversation's sake, right, because this is all to be determined, but just for conversation's sake, if that weekly squeeze in Tesla does end up firing long, all of that momentum that's going to hit that daily chart is going to have us looking for those little consolidations at the 8 EMA to catch the next push higher. And then we're waiting for those little consolidations near the 8 EMA to catch the next push higher. We're waiting for the dips, but when an incredibly powerful squeeze, like a weekly squeeze, starts to release all that momentum, you can get such a serious trend going, you might not dip back to the 21. You typically don't get back to the 21 until the weekly squeeze is done and over with. So if we just look at Tesla from potentially that same perspective, and I would say we're at like the early potential stages here. So Tesla comes back down to 640. It's a different discussion. But just with the daily squeeze firing here, we're trying to trigger a 3-day. And your weekly is your weekly hasn't looked this good since, early this year. So if we're going to start to see that energy that got released on the daily chart hit the 3-day chart and then hit the weekly chart here, that daily 8 EMA should be a level of focus for you. You wait for that break in the action, wait for the consolidation, and then I suggest you look for squeezes on lower time frames on top of the 8. So with Tesla here, you got a nice 4-hour trying to go. Great looking 2-hour squeeze. You got green 10x bars. So all that buildup of energy on that 8 EMA, give it some context here. All these lower time frame squeezes are setting up inside of a daily squeeze that has just started to fire. That daily squeeze that's just starting to fire is taking place inside of a 3-day squeeze. That's, I guess, technically starting to fire here as well. That hasn't even woken up the weekly squeeze yet. So again, I'm going to show you Goldman Sachs here just as a good kind of visual of the power of those multi-time frame squeezes. It's that domino effect. And the domino effect here on Goldman was just crazy. We can't even go far back enough, but it started with a 5-minute squeeze. And once that fired, it triggered a 15-minute squeeze. Once the 15-minute squeeze fired, that triggered this 30-minute squeeze right here. And then once the 30-minute fired, that triggered the 1-hour squeeze. And then as we keep going here, the 1 hour, that wakes up your 2-hour squeeze. And as the 2-hour squeeze gets it going, that wakes up the real bad boy here, the 4-hour squeeze. And then the 4-hour is waking up your daily. And then your daily is triggering your 3-day squeeze. And then that's just waking up the weekly here. So within an uptrend and with bullish structure, with all this action taking place at a key moving average, either the 21 or the daily, those are the kinds of trends potentially we want to get positioned in. So all I'm saying here is potentially picking up some Tesla at the 8 EMA might not be a bad idea. But I do think at the same time, you always do want to take into consideration, say you were right here at point A, and for conversation's sake, point B over the next 2 months is up here at 800. Do keep in mind there's all the potential in the world here. Maybe this turns into NVIDIA and just goes and goes and goes and doesn't come back to the 21 for a month, 2 months. But there is the potential that as we go from point A to point B up here at 800, we very well may come down to test the 21 a couple of times. You get a quick little flush, you shake out all the weak hands, there's your next leg higher. You get a little flush, maybe a little bit of a chop fest. It's not always going to be a straight shot. So taking that into consideration, I like these trades here at the 8 EMA. My favorite entry is always at the 21. Always, always. So my suggestion would be if you do want to look to initiate a position here in Tesla, and I think you give it until September, maybe a little bit further out, but if you're looking to catch the next leg higher, if you want to be on this bad boy from point A to point B, structure a position, position size, time till expiration, where you're going to comfortably sit through a dip down to the 21 or down to 680. Might not be the most comfortable thing, but you got to look at it from a objective point of view. Anytime we're above the 21, we can very quickly come back, and a lot of times that doesn't really change the structure. It's still a good looking chart. So I think if you could stomach that potential dip, you got a lot of good structure here, all the way on the weekly, all the way down to that 30-minute squeeze that's firing off on your 8 EMA. So I do like Tesla here a lot. Now, if we do dip, I would add to my position. Otherwise, I got put credit spreads down here at 640. Which obviously at this point, Tesla comes back down to 640. Dead wrong as far as, it's go time for this one here. So in terms of good looking charts in the market, I think Tesla's absolutely one of them. I think Apple, though I wouldn't buy it here, I like to buy it back here, like we did in the options room. You get a dip there. Personally, I like it. And then I'm still a big fan here of the semiconductors. So I do think a spot in the market you want to keep an eye on. In a good example of why we want to get long at plus 2 ATR, because then you're sitting through that crap. But you got your dip to the 21 here. So I do think if we just hold structure, we shouldn't be breaking under the 50. It'd be a little bit uglier than needed. If the uptrend is going to continue here, we should find support somewhere in this arena. And then I think you look to slowly build a position for the next leg higher. Reason being is it's just a healthy dip on your daily chart. But I think this could give us an opportunity to get positioned here for the 3-day squeeze. Again, kind of a gift. The 3-day squeeze is going to take this from 250 to 285. These are the kinds of little ebbs and flows we want to pay attention to. We don't want to get long here, but we can certainly build a position near the 3-day 21. And if we can get an entry there, think of how well positioned we're getting here in the weekly squeeze. So assuming this little dip here doesn't just completely break structure, I love the semiconductors. So there is NVIDIA, who does have, I think, a great looking daily chart. Earnings on this one is Wednesday. So maybe you buy some calls for next Friday's expiration. Try to catch a move into Wednesday before the close, before earnings. Not really my trade, but it's a great setup. So if after earnings it's still just chilling here, which is probably unlikely, but if after earnings you're still looking at the same daily squeeze, then I'm all for it. Broadcom continues to be my favorite here. So for those of you in the mastery, we had the order working yesterday to try to buy that spread back at 90 cents, which is about 70% of max profit. I bumped it up to 91 and got a fill. So I do know a few of us got a fill. I know some of you didn't. So if anyone from the mastery is listening in, keep the same order working. 90, 91 cents. Don't nickel and dime it. But the beauty of these spreads, we sold, we got long Broadcom back here on the 12th. And a month later, the stock has literally gone nowhere. But because we sold those puts down here at 470 with our spread, that's a little bit of the edge. You don't necessarily need the explosive move. Don't get me wrong, that's the preference for sure. But you can still walk away with 70% of your paycheck. But in terms of the structure here, and again, I'm taking that trade off yesterday because I got paid 70% of max profit to sit through a chop fest. I'll take that every day of the week. But the setup itself here, I think still looks awesome. So you got a positive histogram. Again, I like the semis here. Now keep in mind, if they roll over, down goes Broadcom. So the first thing you're really looking for is for SMH to hold support and hold structure. But this is a great looking daily squeeze. And to up the ante a little bit, you got a 4-hour. You let that clean itself up a little bit. But then you've also got the 3-day. And you've also got the weekly. So I love all that. Just keep in mind, earnings is, I think, the 2nd of September. Yeah, so you got earnings in a few weeks. But I do think you got plenty of time if you want to try to catch a nice little pop here. But the ball is in SMH's court, so to say. But I love the setup here. So I'm probably looking for a new trade. I didn't get the move I was looking for the first time. But if I can take that 70% of max profit and now just put on another trade that's got a little bit more time, different strikes, I'm all for it. So the weekly charts for essentially mostly everything in the semis, Qualcomm, LRCX, TSM, TXN, I think they all look really good. So keep an eye on the semis here. And then the last spot that I'm still a fan of is the industrials. Another triple squeeze. So you got the daily here, you got your 3-day, and you got your weekly. So I think the weekly could take you into new all-time highs. I like the structure here. I think you wait for a bit of a dip before you try building a position here. So if you get a dip, I think you could look for some XLI. You could look for some HON here. This has a great daily, 3-day, weekly squeeze. And then you've actually got UMP, who looks a little bit cleaner on a daily here, also has a nice 3-day and a weekly. But this, we don't want to go about making a living trying to get long up here, because more often than not, you're sitting through that crap. But if you get a pullback, BTFD. And same thing here for 3M. So the daily charts for UMP and 3M, they're a little bit cleaner now. But look at the weekly. Look at the weekly. Like, as a swing trader, it's something I have to get a piece of if I think the industrials are going to fire their weekly squeeze long. Now, granted, I got calls here, so I don't have to add exposure to the industrials, but these are my favorite trades. 3M might make a nice solid move here, and none of it has to do with anything they've done as a company. It's just accumulation in the basket they belong to. My favorite trades. So until this thing either makes the move into new highs or just die on us, I like the odds of it making a move into highs. And that's pretty much what I got on my my radar here. Industrials, some chip maker action, and we'll see if that daily squeeze here for the Qs wants to pop off just maybe one more time. So for open positions, and I'll take a look here at the chat and take a look whatever you guys and ladies want to take a peek at. So in the options room, we have a put spread on Apple that expires next Friday, which I would bank today if we push into 150 and change. Not sure how we're doing here in the pre-market. Oh, actually, there we go. 149. Yeah, good looking setup there. So we got that puppy. Oh, we got a put credit spread in Tractor Supply that expires in a couple of weeks. And as you can all see, it's the same song and dance with me. A daily, a 3-day, a weekly squeeze. That's it. That's why I'm trading it. I don't frequent Tractor Supply too often, but I know a good squeeze. So we got some Tractor Supply here. Got that position in Tesla. Got some calls on the industrials. I got out of Broadcom yesterday, and I got to make sure the rest of the folks in the mastery get the same feel here today. And then we still have a short here on IWM that expires next Friday. At this point, if we close under the 21 today, I'll hold it into the weekend and see if we can get the flush. If we close above the 21 today, probably inclined to take the 25, 30-ish% of max profit we might have and just hit the road here. The trade's not working. Now, we got call credit spreads up here at 226, but this is where you don't want to abuse the spreads. We were looking for this thing to come up to the 21, get rejected, and roll back over again. Now, granted, if we took this trade with long puts, we're getting tossed around right now. But because we sold the call spread up here at 226, we're slowly collecting some premium. But be careful with the spreads. You got to be able to look at the chart and say to yourself, this didn't work. The move I was looking for didn't unfold. The structure that pulled me into shorting this is starting to change here. We're back above the 21. We got a positive histogram. Now, if we can get it close today under the mean, then I'll hold it. And I think we're going to get our 60, 70%. Get a nice little flush here. But it's an important part of the spreads. A lot of times traders will take far too many losses than they need to trading spreads because they'll continue to hold on even when it's very clear the trade is not working. And, they'll sell themselves a dream. Well, if we just stay under 226, I'll get my max profit. If that works, awesome. But on trades that didn't do anything for you, if you can walk away with a profit, I think that's solid. And in the long run, it really adds up. Do I got anything else? That's it. That's it. Yeah, and then earlier in the week, in our class, we took a really small profit yesterday on our Piton spread. We had short strikes down here at 108. And then in the mastery, we took a small loss there. We took a small loss on crowd. What a bag of something. And we took a small loss on Zoom. Then yesterday, some of us got the fill there on Broadcom. So I think I showed you the spreadsheet here on Wednesday. So let's pull it up real quick and then I'll jump in the chat here. So on a one contract basis, and where these numbers can get thrown off is when you start to take different position sizes. So that is something to take into consideration. And I do even think potentially for newer traders, one thing to take into consideration is maybe earlier in your trading journey, so to say, you take each trade with the same position size because these are the numbers here you want to get comfortable working. You start to get 2, 3, 4, 5, 10 years under your belt. You begin to pick up those nuances. You've lived through a few weak markets. You've lived through a few chop fests. You come to learn when's the time to get aggressive, when's the time to dial it down a bit. But just in terms of a one contract basis, we lost 130 on Zoom per contract, lost 100 on crowd per contract, and lost 44 on Piton per contract. And in my book, there's a couple of days a year like this. For me, that would be considered a shitty day where it's like, geez, what a bunch of stinkers. I got to take off 3 duds today. In my book, that's what a bad day looks like. And the key here is you're not trying to hit a profit on every trade. You're trying to put together a good-looking spreadsheet of, say, 100 trades. And at the very end of those 100, you're walking away with a profit. And you've grown your account. So while we lost 280 per contract on those dirt bags, yesterday we're bringing home 210 per contract on Broadcom. That is so key. If you can take just 2, 3, 4 hits in a row, but then one of the trades that worked out for you covers almost all of that, now you're letting Tesla here have all the potential to grow your account for you. You're letting Tractor Supply here who's working have all the potential. IWM, XLI, that's the way you got to look at things. Where losing trades becomes a problem is if you lost $1,000 between the 3 of these, And your trades that are working only have the potential to bring you in 1,000. You're spinning your wheels in that situation. So hope that all makes sense there. All right, let me just take a quick look here one more time at the futures. The futures. A new all-time high for the SPY. Did we expect anything less, though? A new all-time high for the Dow. The Dow looks like it just wants to keep going here. Daily squeeze just fires today. Whoa. And the small caps just keep chopping. All right. Thanks for listening to my spiel. Let me take a look at the chat and see what we got going on. No, DJ, I mean, believe me, I've been there. Looking at trades and judging your progress and judging yourself after a big group of trades. And for conversation's sake, let's just say the number is 100. Judging yourself after the conclusion of 100 trades, it really does eliminate a lot of that emotion. Now, think in terms of probabilities. Right? Imagine you can become one of the better traders in the world, and you got about a 60% win rate. That means at the end of your 100 trades, the end of each block, you very likely lost 30 to 40. Now consider this. We have no control over how those numbers play out. Meaning with your 30 to 40 potential losses out of every 100 trades, you don't know what the streaks are going to look like. Like, it's always going to be random. But within those numbers, it is certainly potential to lose 5, 6, 7 plus trades in a row. So do keep that in mind. I think if we can judge ourselves at the end of a good block of trades, I think you're just going into the game with a bit of a healthier mindset, so to say. All right, but let's jump into a few here. But yeah, been there, done that, my friend. So keep in mind, y'all, I just trade off of a checklist. So anytime I'm looking at something that I think looks good, it's not really a matter of my opinion. I threw the opinions at the door a few years ago. I got a checklist, and if everything lines up, then I'll trade it. So Uber here, for a long position, doesn't fit my criteria. There's no daily squeeze. EMAs are stacked negatively, which just generally means the path of least resistance, really until further notice, is to the downside. And there's a weekly squeeze firing short. So just based on that kind of structure, this is something I wait for a nice strong bounce. And then I probably look to short it. That's what I would do with Uber. Now that doesn't mean you can't go long here and make a killing. No. This might be somebody else's checklist for a perfect opportunity to the upside. You just got to come to find what your checklist is. Oh, Shopify. Let's take a look at that one. I mean, it's until this just completely gives out, ignore it. That's the thing with the context of the squeeze. Like, nothing happened here this week. What was Shop a couple of days ago? It was a daily squeeze, building energy near the 21 with stacked DMAs. What was it on Wednesday? I don't care what it did on Wednesday. Just big picture thinking. What is it doing? It's daily squeezing with stacked DMAs. What's it doing yesterday? It's daily squeezing with stacked DMAs. In other words, regardless of the up and down or the noise this week, it's nothing but that. And if you're a newer trader, a good exercise this weekend is, spend 15, 20, 30 minutes just learning about the concept of ATR, average true range. It'll make so much more sense of the back and forth crap to you. By default, Shop has been behaving completely normal. There's your 21 EMA, and the yellow line up here measures one average true range move above the 21. And then the yellow one down here is one average true range move under the 21. Average. Noise. It's just what the stock is going to do. And the power of the squeeze is we're waiting around for that moment in time when we can make a bigger than expected move. where we're going not just one, but two, but maybe three average true range moves above or below the 21. So when you look at a squeeze for what it is, and when you look at average true range junk for what it is, that's a well-behaved squeeze. Wednesday might have looked a little sketchy. It was less than an average move. So I think Shopify looks good here. But that's how you got to distinguish between what is basically most likely price action, just trying to flush folks out, versus something like a Zoom. Now, Zoom arguably might just quickly bounce back here. But Shopify's not even at that point yet. You're holding your 50. I love the daily squeeze. I think it looks great. Same thing here. I can't go long anything if there's not positively stacked EMAs. And again, without even knowing what that means, if there's positively stacked EMAs, the trend, the momentum, the direction, the path of least resistance is typically to the upside. In this instance, they're stacked negatively, which is just quite the opposite. Momentum, trend, everything kind of points towards the downside here. So it wouldn't be something I could go long. Again, just based on that rule, though. Yeah, so Piton, I jumped out of there, was it yesterday? It was all the blur. Wednesday. Yeah, Wednesday. So you got 115, 110. It's pretty close here, 115 and 110. Here's the thing with Piton. And this is where you're always a little bit torn. It's daily squeeze versus weekly squeeze. Now, again, I just came out of this trade, but I can always be objective. That isn't the most promising daily structure. Based on my checklist, a daily squeeze that's taking place under the 21, under the 8, with a negative histogram and no stacked EMAs, strikes me as something that could easily flush to -2. I look at the weekly chart with a nice positive histogram, holding near the 21 with stacked EMAs. To me, this kind of structure, until this changes, just tells me that Piton has the chance over the next month, 2 months, 3 to 4 months here to get back into a trend. And if I had a put credit spread that expired in December, I would have no reason to jump ship right now because the structure on the weekly hasn't changed. Where I was with things that expire relatively soon is, yeah, I do think that weekly takes us higher into the end of the year. Next 10, 15 days, that's just not a structure I'm a big fan of here. So that's what's tough about Piton. It's a daily chart versus a weekly. And for me, I'm just tough to gauge. Who will win? And the conflict here is, that daily squeeze could just take you quickly to 105, and then you bounce, and then, your weekly chart never really sneezed. That's what can be tough about that one here. Michael, I would agree. So financials right now. Bank of America, Goldman. Got the triple squeeze working away here. And look at that 3-day. So keep in mind, though, even if we think that weekly squeeze has all the potential in the world, is this necessarily where we want to build a big-ass position? The ship has sailed. Now, the ship might continue to sail, but it probably has to come back and get ship gas. Awful analogy, I know. But when you have those bigger time frame squeezes that have yet to quite fire yet, I think as a swing trader, you want to be all over those dips. You at least want to be observant of those dips. Absolutely, Bank of America. Now, if I look at the daily chart, I say, okay, yeah, that 3-day, that weekly, September, October, November, maybe December, I think he got some potential here. Now, with that being said, because of the potential of a weekly squeeze and a 3-day squeeze, give yourself the luxury of picking your spots wisely. Now, maybe it just rallies here and never looks back. But I'd suggest everyone's focus list. You have XLF, Goldman, something in the financials to take a look at on a dip. That's my advice. That's it. Ship gas. That's a thing, right? All right, okay, I'm just getting caught up here. Jose, if you go to focusedtrades.com, I do believe you might have something on there that kind of briefly goes into some of the components of the checklist. I'll give you a tip, and this is the most important part of the checklist, and everything else adds the needed context. But the heartbeat of it is I don't trade anything that's not a squeeze. That's it. Now, the other tools, there's a lot of things that go into making that squeeze work in your favor in a high probability fashion. But there's one tip I could give to traders, and it's just my experience. Commit to trading squeezes. That's it. If you want a day trade, 5-minute, 15-minute, 30-minute squeezes. That's what I love about Chandler's game. He's been able to take like very solid, very high probability stuff and take it to the lower time frames. A lot of his great trades come from a squeeze. Now, his context is point of control, the cloud, but for a lot of traders, that squeeze is such a key component. Marry the squeeze is my suggestion. Let's take a look at PayPal. That's one I've been hearing rumblings in the street about PayPal. So you would look at a daily chart and say, oh, that's pretty ugly. Yeah, and it's kind of ugly, but I look at a weekly chart and I like it a lot. I like it a lot. As the saying goes, it works until it doesn't work. And what I mean is, since this thing just got into this like killer weekly trend here, the dip to the 21 held. The dip to the 21 held. And it held, and it held, and it held. Now, one thing we should point out here. So this had kind of held for 2 weeks, and then the move got going. This held here for about an entire month, and then we got going. This held for, again, we'll call it a month and change. That only lasted 2 weeks. The reason I'm bringing this up here is a lot of times traders get a dip to a support level, and then they back themselves into a corner buying that dip with a trade that has to work out in like 3 or 4 days. My advice here would be is look for something into September, October. Maybe, figure out when the next earnings announcement is. Just try to play the continuation here of the weekly trend. I think you got to give that some time, though, because it can take a month, 4, 5 weeks to really get the party going. But until further notice, you're looking at one of the better weekly trends in the market, and it's pulling back to a level that's respected and continued off of the last 1, 2, 3, 4 occasions. Maybe fifth time is a bust, but a great looking trend. Tech now, unfortunately, we can't share the script for the stack DMAs. And not to plug my class, but that is one way to get the label there. So in terms of like proprietary stuff that I use, stack DMAs label, 10x labels. I use the pro version of the squeeze, but in terms of running your business on these kinds of setups, you need a couple sets of Chandler channels. Every platform's got that covered. Your 8 EMA, your 21 EMA, everything's got that covered. You want to smack on your 50 SMA, Old Faithful, why not? And then most platforms, you got the squeeze version, the OG, the original gangsta. All right, but futures look good here, guys. Let me try to answer a few more questions. And I appreciate you all jumping in here with me, believe me. Got a nice crowd on a Friday morning. Ooh, nice. Very bullish. BIL there, Bill. Bill is bullish. And you made a very nice move. You're pulling back to your 21. Brand new daily squeeze. Earnings is in a bit. A couple weeks or so. So do keep an eye on that. But a great looking trend going here on your daily chart. Very nice. Momentum's intact. You're only a couple weeks into a weekly squeeze firing. That can certainly continue. I like that one a lot. A good find. A good find there for Bill. All right, last one we'll take a look at here. Piton's the kind of thing where you got earnings coming up. So to do anything for me at this point now in the short term is a bit difficult before earnings. My game plan here is let's see how earnings goes. And I continue to still be a fan of the weekly squeeze. So if after earnings it's painting a similar structure, weekly squeeze, positive histogram, you're not extended to the downside, you're not extended to the upside, rather you're just building up here at the 21, then I'm probably jumping in for a trade into September, October. Probably October, just to give this little nut job all the time it needs. That's my game plan at this point. I think that weekly, I think that 3-day, they got great potential here. In the short term, earnings is coming up, and the daily leaves a little bit to be desired. All right, gang, great stuff this morning, though. Again, I apologize for not getting to everyone's questions. Trying to do my best, but I appreciate you spending just about an hour with me here this morning. So I hope you have a good weekend. As always, keep an eye here on the channel, and I'll be putting up the Watchlist video this Sunday. But I do also suggest, it's in the link, it's in the description of our videos. You can check it out on focustrades.com. Subscribe to the free newsletter. Every Sunday, we send out a free video to the people who subscribe to the newsletter. And one thing I'm going to spend a good, probably 15, 20 minutes covering in this weekend's video is, where is it here? More of a deep dive into the things we discussed a little bit on Wednesday and briefly this morning. So go on ahead and check that out. But I hope you all have a good weekend. Be safe. Pet your dog. I'll talk to you soon.